Hey there, it's Mitch Goldberg. You're watching my live stream, Be the Boss of Your Money. Thank you so much for joining me. We're just getting started. So if you just tuned in, thank you so much. We're going to talk about today's market, May, the month of May. A lot of fireworks. In the month, we saw an 8-week losing streak come to an end, in the Dow Jones, and a 7-week losing streak in the S&P 500 and the Nasdaq, and then things started to turn around. I think it was accepted, like in my opinion anyway, that it was common wisdom that when the market bounces, it'll bounce pretty good. And we had a hell of a bounce last week. It held pretty good today. I mean, things were off a little bit today. Nasdaq was actually up a little bit. No big deal. I think the market's trying to find its footing. It seems the market's gotten used to high oil prices. It's gotten used to the Fed raising interest rates, and now I think maybe the selling. Look, you can't know until well after the fact if the selling is overdone, if it's over. You just can't tell right now. I mean, I could give you the scoop for the next couple of days. It looks like it was oversold, the market, and it's bouncing back. Does it mean that we have to uh, go all the way back to new highs? No. Does it mean we can't go lower? Of course not. So those are some of the things we're going to talk about today. And I want to talk to you about the a big ESG fund. The ESG sector, environmental, social, and governance investing, has been a huge topic, a big investment theme the last couple of years, and it's attracted a lot of money because it's been such a strong place to be, such a strong performance place. But I pointed this out some time ago that one of the reasons, or I should say the main reason ESG was doing so well was because it's so tech heavy, it's so concentrated in the tech space. And now that the tech sector has gone down so much, all of a sudden ESG is underperforming benchmarks. So we're going to take a look at that as well. So let's just roll into the intro. I hope everybody had a nice 3-day weekend. Probably a lot of you made it into a 4-day weekend. I say we should have more 3-day weekends. We don't need a great reason for each one of them, in my opinion, but it was a good weekend. I feel like I had a vacation. I could use another one. I'm still recovering, and wow, I could use a good night's sleep. But whatever. Here we go. Let's roll the intro. Thanks so much for joining me. I'm Mitch Goldberg. You're watching my live stream, Be the Boss of Your Money. We talk about investing, personal finance, what's happening with the economy, what's happening with your personal economy, personal finance. We get into a little bit about politics in terms of how it could affect you, inflation, and ultimately the idea here is to help you take control of your money. That's why it's called Be the Boss of Your Money, and help you make better decisions, financial decisions. Sometimes a financial decision is to do nothing, but doing nothing is still a decision as long as it's conscientious. I mean, if you just ignored things and said, I'm not going to open up my brokerage account statements or log in to see what my account is doing, I don't want to know anything, I'm just going to ignore everything, that is not a decision. That is not paying attention. That is being juvenile. You need to pay attention. But paying attention and deciding not to do something is a decision. So it's about making investment, personal finance decisions. It's about making personal finance decisions. It's like a tongue twister today. I've been all over the place, guys. Actually, I have to leave in a little while. I have to get to a dinner uh, very soon. It's like 97 degrees out in New York, and I'm like, man, I hope the place I'm meeting people at has really good air conditioning or just really cold drinks. I'm sure they'll have both, though. All right. So, how was your weekend? Everybody have a good one. You do anything special? My special carry away for the weekend was I found 3 ticks on me. I have to take a double dose of doxycycline and go back to the doctor in a few weeks to see if I have Lyme disease or not. So fun stuff. But it was a great weekend in spite of that. So let's take a look at how things closed up today. I'm just going to make the screen a little bigger before I take you there. Okay. Let's go to screen 4. Pop myself up in the corner. Hey, here I am in the corner. All right. So the Dow was down 200. Oh, there. Okay. NASDAQ was off 49. It did get to positive territory at one time. Look, believe it or not, folks, I'm calling you folks. Is that okay? I don't sit here and watch the stock market all day and get like computer face. Just go like I don't just sit here. Let me do that so you can see it on the big screen. See, that's computer face. I don't just sit here and stare at the computer all day and get computer face. No, it's not what I do. I'm actually working. I'm busy. Like I don't have the luxury of staring at the market all day. It's I don't have that time. I don't need to stare at the market all day. And see what the stock market's doing in a minute to minute basis to see what every stock is doing. That actually is like the most counterproductive thing to do is to just watch everything in a minute to minute basis. I mean, if you're a day trader, that's one thing, but I'm not, and I don't do that for my clients either. So whatever. Just let's get back to what we're talking about. Okay, so Nasdaq down about 50. And S&P down 26. But at least nothing was down more than 1% of the major averages. Oil had a nice little bounce, just up a little bit. It was up more today. That gave it up pretty good. But the U.S. 10-year Treasury yield up to 285. It got up to about 3.1% about 2 weeks ago. That was its highest level so far. The VIX was up a little bit. Not much. I mean, 0.47 is not anything to write home about. I'd like to see the VIX trend lower to under 20 as opposed to 26. But, if we see it under 20, we've got ourselves a real rally on our hands. Until then, there's going to be a lot of indecision. Let's take a look at the bond market. Treasury yields were up across the board. Not much, just barely. Yeah, another 3-month was a little down a drop, minuscule amount. But overall, yields moved up just a little bit. It's the same old concerns. There's nothing major today, nothing new today in financial news. It's just we're thinking about inflation, we're thinking about interest rates, we're thinking about Fed policy, we're thinking about the price of oil. We've got the war in Ukraine. It's just these big macro themes that are holding everybody captive. That's where the attention is. So let's take a look at crypto. All of a sudden, crypto moving up a little bit. Bitcoin back above 31,000 out of nowhere. It was like 28. Now it's 31. So crypto getting a lift. And I think that's good for a lot of people. And it makes me, I was asked this by people all weekend. So, Mitch, what do you think of crypto? Do you like it? Is it real? And people have very strong opinions. Oh, I own some. You have to own it. It's going to go up. And then the next person says, I wouldn't touch that thing at all. It's such a scam. My opinion is if you want to speculate and you can afford it and you don't mind to gamble, have fun. But that's how I look at it. I don't look at crypto as something that I want to invest in. I don't really advise clients either way. To me, it's more of a matter of personal finance. Can you afford to gamble or not? And then if you want to gamble, what do you want to gamble on? Some people like to gamble on biotech stocks. Some people want to gamble on crypto and find the next big hot crypto or the next small crypto that's going to become the next big hot crypto. So whatever floats your boat. I don't chide people, especially clients, if they want to take a little speculation and they want to gamble a little bit, as long as it's within their personal finance. They have room for that in their life. They enjoy it. They think it's interesting. Good for you. But a lot of people can't. A lot of people can. I just find a lot of people get into this stuff who have no business being in it. That's all. All right. Let's take a look at a couple of individual situations. AT&T. I mentioned AT&T like last week we talked about it. It still has about a 5% dividend yield, But has anybody noticed that AT&T was like 18, 19, and it's slowly creeping back up? Then it's 20, and it's 21 and change. And it doesn't have big moves. It just very incrementally is moving up. And a lot of analysts agree that now that they made the spin-offs, they spun off their Discovery TV, and they're just getting back to being a pure play company, a 5G company. Uh, they're they're worth more. And I just feel like this stock has been on a durable, it hasn't been on a tear, but it's been on a durable rise according to the chart. I'll pull the chart up in a second. Salesforce.com came out with earnings after the close. I don't know if I have the news on it. That's not really that big of a deal. But Salesforce is up 10, and Salesforce and AT&T are two stocks that I think have fallen so far out of favor to the point where their fundamentals are better than that, are better than what investors are currently thinking. And I think these stocks are, well, I have to be careful with what I say in social media, but I think these stocks are perceived by other investors as good value plays. And what's a good value play? A good value play is not a stock that's down a lot, that's not bleeding anymore, not hurting anymore. A good value play is when a company that's a value stock becomes a growth stock again. That's the best value play, in my opinion. That's what works. When a value stock becomes a growth stock again, and it looks like these companies, AT&T and Salesforce, by the way, Salesforce changed their name from Salesforce.com to just Salesforce. Uh, I think that these companies are showing growthy characteristics. What else do I want to show you? I'm going to get to the ESG stuff in a second. Sector ETFs. So consumer discretionary was the winner of the day. Big part of that was Amazon. Financials are off a little bit. Nothing major. I mean, healthcare was surprisingly weak today. Building materials is weak today. Building materials down 1.5%, but that's not out of the realm of possibilities of what you could expect to see from building materials. And energy was lower today after being up today, earlier today. My sense is that when you start to see the energy stocks start to go down, when you see energy stocks start to retreat a little bit, even when the price of oil goes up, to me, it's more of a sign that it's a sign that the sector is getting toppy, and everyone has rushed into it. Even now, there are still analysts who are saying you should own more energy, keep buying energy, and I'm like, you know, we, we're not far from a tipping point. People don't realize how easy it is to go from, when you go from a small deficit of oil supply and just moves it from a tiny little oversupply, from a slight undersupply to a slight oversupply, that could rock the market, because oil is a marginal trade. The very last barrel of oil bought and sold is what determines the whole energy complex for the world. So you see a couple of barrels of oil drop $3 or $4 a share just because there's a little too much of it all of a sudden that day. People start to think, wait a minute, is oil rolling over? And if you believe that, then tech stocks are oil stocks get hit. Look, like I'm exhausted. What can I say? It's been it's a Tuesday after a 3-day weekend. I'm shot. Man, oh man, I did not get enough sleep. But anyway, I'm on social media. You're watching me on social media, but I'm in other places too. I'm on Instagram, YouTube. If you're a YouTube follower, if you subscribe to YouTube channels, please check mine out. Subscribe. I'm on, of course, LinkedIn, Facebook, Twitter. So wherever you get whatever your favorite source of social media joy is, go check me out. And while you're watching this, if you wouldn't mind, give me a thumbs up, a heart, a care, a support, an applause. Depending on what platform you're watching on, you have different choices of reactions. And if you have any questions, definitely hit me up in the comments. Like, ask me a question right now. And words of wisdom, words of encouragement are always appreciated as well. Okay, so let's talk about ESG investing and what the heck is going on. Okay, I want to show you a chart. No, I want to show you a chart. Okay, yeah, here it is. I'm going to pop this up. All right. The red is the S&P 500 over the last year, trailing 12 months. The S&P is off a little bit. I know what you're thinking, like, wow, the S&P is off so much. By the way, you cannot invest directly into the S&P 500 or any index for that matter, but you could invest into a security that tracks or mimics an index. Just have to squeeze that in there. But the the um the S&P 500 is only off a little bit in the last year, trailing 12 months. It's just the last 6 months it's off a lot because it just had such a uptick and then a downtick. So see the chart in the S&P 500 looks like a triangle or an upside down V. But why is ESG? I'm comparing the ESGV. This is a big Vanguard um, total stock market all cap ESG fund, and it's down 6.5%. Okay, so what gives? This is something we spoke about, and I think it's important to just touch upon this. A lot of people have become very enthusiastic about ESG. It's a good time for a camera switch. So a lot of people are very enthusiastic about ESG, and I could see why. ESG investing, environmental, social, and governance. It means that you are investing in companies that are not just trying to maximize profit, but are trying to maximize profit while being good stewards of the environment by promoting women and minorities, by having a good governance structure that's fair for all shareholders. That's what ESG is all about. So it's been a hot trend, and ESG has been galloping ahead, and people have been making a lot of money for it. And it's been outperforming benchmarks like the S&P 500. So it started to seem like it was easy. I'm just buying ESG. I'm feeling great about it. And what I pointed out time and time again over the last few years is that ESG, especially the environmental part, but all of it, yeah, ESG, it favors very heavily technology companies. So while the Nasdaq was outperforming the S&P 500 and the Dow, ESG funds, which have a high representation of tech and a lower representation of things like energy companies, ESG has done incredibly well. But my point was, it's doing well because you're basically buying a sector fund of technology. And now the technology is getting slammed. People are walking around with the walking wounded. What the hell happened to my ESG fund? So I'm going to show you something here, okay? Let me see if I could make this a little bit bigger. All right. This is the Vanguard ESGV ETF. It's still almost 7% Apple, 6% Microsoft, almost 3% Amazon, 2% Alphabet, 1.8% Tesla. Okay. Another 1.79% Alphabet in the Class B shares. So it's almost 4% Alphabet. Meta, which is Facebook, Nvidia. Okay, so just Apple, Microsoft, Amazon. Amazon is getting crushed this year, just obliterated. Alphabet's not doing great. Tesla's getting hit hard. Nvidia's gotten crushed. Meta, which is the old Facebook, getting crushed. And JP Morgan's been getting crushed. Now, I know JP Morgan is not a tech stock, but it is in the top 10, so it's worth taking a look at. But when you look at the tech stocks in this fund, you could see why it's so heavily it's represented so heavily by tech stocks. And that's the problem. I've always thought of ESG as somewhat gimmicky in terms of how it invests, because you're buying you're buying a tech fund, and I don't think a lot of people realize that. So just want you to be aware of it, and that's why your ESG funds, if you are an ESG investor or if you have a focus in that, now you know why your ESG funds are doing so poorly. And if you haven't looked at your statement yet, the March statements are coming out in about a week. No matter where you have your brokerage accounts, you'll see that they've taken a pretty nice size hit for the month of May. So you're going to see that. And that's about it. That's what I wanted to talk to you about today. I will be back tomorrow with a more clear-eyed view of things. I've got to get going. I've got to be somewhere in about 20 minutes. So I say good night to you. Thanks so much for watching, and catch up soon. Bye.